All right. Hey, as long as they can hear me, that's fine. So yeah, all right. Well, welcome back to the Financial Heat podcast.
We just changed the name, just so you know. Financial Heat.
Yes.
Yeah, we're
Till
still
I know.
rebels, but
Yeah, but till I
No,
know
I'm
what
not anymore. I've
the
changed it. I've changed. I'm like, dude, I have changed. Trust me. I'm living in the
change,
boxes from now on.
changed in what way?
uh-oh.
For the good. For the good, bro. I'm like just straight line,
Thank
dude.
God. I've been
No
waiting for
more,
that
no more
forever.
rebel, bro. Just straight line.
There you go.
So much.
Oh. So yeah, last week we were talking. I was at the Ethereum conference in Cannes. Everyone there was like 30 years old, semi-autistic. Interesting group. I think the most interesting thing to come out of that was Robinhood tokenizing stocks in Europe.
Yeah.
We've talked about stable coins, tokenization. We've had people on the podcast about that. That's going to be a game changer. Not exactly sure how, but know that it is. So, that's something that we're definitely going to want to keep hammering on this podcast so people are ready for whatever comes. And and we're ready too. I mean, I want to get kind of the smartest guys, on that. Um, Market keeps bleeding up. We're having a red day today, but if anyone noticed, Trump tweeted something along the lines of market at all-time highs, and we're going to keep it there. You if you read my newsletter, I think there is no better buy and sell signal than Trump. So, I mean, I'm buying the dip in between calls today. Unfortunately, it's a busy day, but got some trades off, and yeah, I think any weakness after Trump, is telling you to buy, and then also, he kind of pushed off the tariff deadline now to August. So, I mean, I think market's overbought. It's due for some sort of red. So, the fact that it's down 50 bips or so is perfectly normal to be expected. I mean, at some point, you got to figure the S&P kind of moves into, its 10-day moving average, moves sideways a bit, but don't see anything at the moment screaming, hey, you got to get out of this market. We did in today's newsletter wrote about a tactical way to hedge using ARC. I'm not in ARC puts at the moment. I do, use a moving average crossing system to decide when to get in, and no reason to do that now. So, full speed ahead until the market tells you not. Jeremy, what are your thoughts here?
Agreed. I know last week when we were on, well, not last week, the week before, we were talking about hitting a 556.50 target on QQQ. Nailed that and then some. This pullback gives about half that move back, which is acceptable and expected. And yeah, dip buying opportunities are starting to really stack up. I know that there's some rotation that we're looking at, particularly in the AI space, with the big beautiful bill coming in and kicking in some support for that. I think we're going to start seeing some of those themes and attached themes start to really take some weight into the market. And in the meantime, it's just become a member of the old BTFD crew. It's looking good.
So what I was looking at, it already ran away on me. What I was looking at from the big beautiful bill were the private prisons. So Geo
Yeah.
and CXW. Looks like I wasn't the only one.
Right.
I did not get a chance to get into Geo. I mean, I
I
still
forgot about
might.
Geo.
Oh, I mean, everyone
Dang.
forgot about Geo until they put a whole bunch of money in the bill for. I mean, now they're saying that ICE has more money in their budget than the entire Russian defense budget.
Wow.
So Geo
We
does
can't forget
detention
about
centers, right,
Geo.
Matt?
What's
Geo is
that?
CXW and Geo do detention centers, basically,
They're
right?
the
That's
private prisons. So if you're rounding up a whole bunch of people and you need to put them somewhere, you're
these
putting them
dudes.
in one of these guys' facilities.
Are
Yeah,
these
so
still
I'm
real
about
estate
to-
investment trusts? Are they
What's
still
that?
structured as that? Are they still structured as a REIT?
That I do not know.
That's
I
a good
don't think
question.
so.
Yeah, these are stocks I've been in and out of ever since, Trump won. Geo was the only thing I bought before the election.
I think they changed their structure. They used to be REITs, and then they became.
Yeah, that's what I remember. There's
Yeah.
also if you're looking for a private prison play, Aramark. They supply a lot of the catering for these.
Yep.
Not a lot of people know about them. They spun off their uniform division, so they're not like Cintas
Wow.
anymore.
They know about this one too, bro.
Nice.
Interesting. All right.
Good stuff.
Some big charts. Should I make the
that's
intro?
a big candle in May.
Should I make the intro here, Matt?
Yeah, we gotta let people know who this
Hey,
guy
go
is.
ahead. You introduce Tony.
All right, we got Tony Dong here from ETF Portfolio Blueprint. Dude's everywhere. He's on like U.S. News and World Report, Kiplinger, Money Sense, Motley Fool, et cetera, et cetera. One thing he did say, which I believe to be true, is I'm on a mission to educate retail investors. I take pride in delivering high quality, engaging copy, which he does. Tony, what's up, dude? What do you have to say? Where do you think the market's going? And we could obviously talk about a million things here, but when do you want to go hit us up with anything you got to say?
I'm not really much of a technical guy. The only thing I noticed this morning was Tesla just absolutely eating it. Not entirely unexpected given the developments over the weekend. Lulu's down again, so that rebound hasn't really materialized. But, we're firmly back in extreme greed mode for better or worse. And I do agree with the sentiments echoed earlier. When Trump says buy, it like he do time that bottom perfectly, whether by luck or insider knowledge, I don't know. But if someone gives you that reliable of a signal, you take it. But fundamentals, I firmly believe we are overvalued. Schiller PEs at like 38. The only time higher has been during the dot-com bubble. And the Buffett indicator, we're at 200% of GDP in terms of market cap. So a little worried about that. But as everybody said earlier, the technicals, I think we do stay higher for longer. Not maybe in terms of rates too, but also in terms of what we're seeing the SPX at.
Some melt up moves. I almost like Tesla
So
here.
I want to touch on something Matt said just now, right? So Sam Altman, Open AI, after all this stuff about Robinhood came out about like these assets tokenized, or Sam Altman case came out and said these tokenized assets are bullshit and these aren't real companies, et cetera, et cetera. Did anyone talk about that at the conference, Matt?
I didn't spend a lot of time at the conference.
All right.
Once I realized it was a bunch of 30-year-old,
Right.
wasn't exactly my crowd, and I was in con, and being inside a conference center when you can be outside is
Right.
not as enticing.
Right.
But I don't think the question really matters. I think tokenization of assets, the way that our markets are structured now, given the technology we have, doesn't make any sense. And so, and tokenization probably solves that. It's not an overnight thing, but it doesn't make sense. I mean, why does our market open at 9:30 and close at 4? Why can't someone in the UK buy US, investments, but someone in Korea can? There are all these things that they don't make a whole heck of a lot of sense. Why do we need a day for stuff to settle? So I think we're going to see massive changes to the system based on technology. And it's interesting that, a company like Robinhood, maybe they're on the forefront. We got a 2x on this thing. I also own it personally. I've been riding it up and, have resisted the urge to take too much profits. I mean, one of the days it's going to slap me up, upside the head, but, so far so good.
Any thoughts on that, Tony?
I think if you are going to offer private assets to the public, tokenization is, in my opinion, the better way to do it. They're doing it through a special purpose vehicle. That's from what I've heard. And, the alternative is, as we see, cramming it inside a closed-ended fund, which you get the whole DXYZ tobacco where it trades at 1,000% premium to net asset value, which is If you buy that, you're asking to lose money. Or you cram it in an ETF and it doesn't work with the whole creation and redemption thing, and then you get these weird marks that are like off, like completely off and like outdated. So, for me, I haven't really looked into tokenization thing much, but I think it's the best case scenario for eventually offering private assets to the public. And the question I would urge everybody considering this to scrutinize is understand the underlying SPV under it, right? Are there extra layers of fees? Are there redemption gates? Like they don't really disclose this on the ticker page in Robinhood. So, do your due diligence and look further into that and understand you are buying into an SPV, not actually a stake in Open AI or SpaceX.
Right.
It's almost a
Got it.
derivative.
Right.
So Tony, from what Pat said, your passion is educating investors. What does that mean? Because in finance, I'm a big believer there's no one right answer. There are some wrong answers, but there's no one right answer. Everyone's got a different philosophy. The market goes up most of the time. So I mean, even if you've got a stupid investment philosophy, you can still do pretty well with it. What are you educating people about? I mean, where's your passion on the investment side?
Good question, man.
I simply just want to show retail investors as many different types of ETFs and ways to use them. So I'm very much against what I call the Marxist philosophy of boggleheads. Like it's just it does nothing productive to shout down any conversation about assets and investing with you should buy the total stock market and stick to it. Like it just ends there. It's an intellectual dead end. It's stunted. So it's anything and everything can be used to make money. Now some things are easier than others, and especially it scales based on your level of knowledge and how much time you can put into it. But I don't think there's like inherently a bad ETF unless of course it's just poorly structured in general, charges egregious fees or something. These are structural issues that no amount of good trading is going to overcome. But there really is a niche for everything these days. And one of the recurring columns I have on ETF Central is there's an ETF for that. And it's just what the title says. Any investment thesis that you can conceivably express is either ETF'd or will get ETF. It's kind of like the rule 34 of ETFs,
So that's interesting. I'm writing actually about this in tomorrow's newsletter because Barron's just had a big cover story about ETFs, and we're going to help you make sense of ETFs. Basically, they said, levered ETFs are bad, and you should just buy, a cheap total market and, and make that the core. There's other stuff if you want to use it, but, blah, blah, blah. And I've always taken the tack that ETFs are kind of two things. First, they're access vehicles. Probably 90% of the ETFs out there, you could replicate yourself, but buying it in one click, one ticker is just easier.
Absolutely.
And they're also tools. And, if I sell a hammer, 9 out of 10 people are going to use it to hammer a nail in. One guy is going to take the hammer and hit you over the head with it. Does that make the hammer bad? No. It makes the guy hitting you over the head with it bad. So we're obviously purveyors of leveraged and inverse ETFs, get a lot of criticism on those. They're tools. There are right ways to use those. There are wrong ways to use those. I think the world is a better place when you have more tools instead of less. And I don't like someone preaching to me, just buy a low cost S&P or total market, index fund and, make your 8 to 12% a year and be happy.
Yeah, that's not why we're here. We like alpha. And I will say that, leverage ETFs, a lot of people just use them for trading, but one use I love them for is capital efficiency. So if I want 100% exposure to US large caps instead of buying SPY with all my portfolio, I could just allocate 33% to UPRO. That's a 3 times leverage S&P 500 ETF. That gives me 100% notional exposure with just 33% of my capital with no risk of margin calls, right? Yeah, I could use futures and get it more efficiently. I could use margin, but like you said, this just requires one transaction, one buy and sell. Like all I got to worry about is this spread, and that's it. The daily resets, that's there for a reason, so you don't get blown up by a week-long decline. It's the trade-off you take. And if I don't want to use leverage ETFs, just don't buy it. Just don't buy it. But I'm not going to go out there and nanny other investors by saying, "Oh, you should." I'll tell you the risk. I'll point it out in the prospectus where they say this thing could go to zero in a day, however unlikely it is. But that's it. I assume that if you're going to be in this market, you are a rational adult capable of making decisions and reading. And if you aren't, well, Godspeed to you.
Ideal, yeah.
Very refreshing attitude.
Heck yeah.
Let me ask you a question. So, Tony, you talked about like European. Are you talking about aerospace and defense? We have a European aerospace and defense fund. Any thoughts there? Overvalued, undervalued, still running? What do you think?
I think the money for a long-term secular tailwind for European aerospace and defense there, I don't think the political will is there. I have seen Germany, I have seen Spain just completely blow past budgetary constraints and not allocate capital efficiently. They don't seem to have the will to actually ram things through. It always gets bogged down in some kind of red tape, some kind of paperwork. You've seen it with their energy initiatives. That's why they're going back on that and going back to fossil fuels now for some of them, because they can't keep up. And I think defense is going to be the same thing. They understand that Russia is going to be a threat. They understand that US has been over contributing to NATO and they need to pull up their bootstraps and do something for once. And unfortunately, people bid up the valuations of these companies, but I don't know if we'll actually see those capital flows from government to the coffers of, say, Rheinmetall or BAE or Thales. And again, nothing against the companies. It's just the political will or lack thereof of the current European Union to actually do something meaningful. I think we're going to see the US once again be the primary backer of causes in the Eastern European sphere for a while because Europe just can't get it up, for lack of a better term.
What do you think, man?
Yeah, I think it's a theme you want to be allocated to. I am a counter trend guy at heart. So, buying something that's up 70% year to date is not something I would necessarily do. But something that's up 70% could end up being up 140%.
Right.
I learned that when I sold Axon at 387 and thought I was hot. Like, no, it's I look at it now and I wince so hard.
Right. And we've all got those things that, oh my God, this is, nosebleed, I'm gonna get out, and then it, 10x's on you. And you keep waiting for the dip to get back in, and you never get a dip.
It's at 800 now.
Oh God.
Yeah.
So Matt, do you know this ETF SVOL?
Sorry, I didn't catch that.
Sam, Victor, Oscar, Larry. You wrote about this one too.
SVOL? Oh my God, I love
Tony
this
wrote
thing.
about this one. So
this is the most predictable thing to trade. Anytime spot VIX goes above 50, you go long on this. So I went long on this in April, and I got in at 14, got out at 17. I don't even care about the yield. It's just I preferred over the other short vol futures ETFs because their exposure isn't as high and they actually hedge. And also no K1, man. I remember buying SVIX and I got a K1. I'm like, what? This is a commodity pool? Like,
I hate K1s.
Right.
Super archaic.
So explain this one again shortly, or just a little slower. Like why would you want to buy this or short it?
This is basically simplifies volatility trading hedge fund. So the core is a variety of other simplify equity and fixed income ETFs. They do that to support the NAV. And then it allocates a portion of the exposure to shorting front month VIX futures. And that's where most of the yield comes from. As volatility reverts and as contango eats away at that, that's where the majority of your yield comes from. But this is a very much left tail exposed strategy. When the spot VIX suddenly spikes, this can blow up, as did XIV, SVXY in 2018 during Volmageddon. To hedge against this, SVOL does have out of the money VIX calls that provide, it gives it a bit of a cushion when the VIX spikes too much. So far, it's actually done okay. In April, when that VIX hit as high as 60, this thing didn't blow up. It drew down far less than the others, and it caught the recovery fairly well too. For this, like the price chart is misleading because once again, it pays like a 20% distribution. The total return chart is much more attractive. But I use this to trade the VIX once again because I don't like touching futures myself. And the other VIX ETFs like SVIX, they give you a K1. I don't want to file K1. This thing spits out a 1099. It's easy.
Yeah, what I do is I like just buying puts on VXX.
Oh yeah, you benefit from the negative roll yield there.
Yeah, I mean this thing's designed to go to zero.
So I'm a little different. I love scalping futures.
And what is it, Max? Matt, I mean, excuse me, Max. Max.
Oh yeah,
Yeah, that's the ETN.
like playing
Yeah,
whack-a-mole on that
it's
one.
designed to go to zero, basically. If they didn't reverse
Reverse split,
the,
yeah.
all the time, it'd be trading it like, pennies.
Or negative.
Well, depending on the shape of the futures curve, you can also go into mid-month with a VIXM.
Right.
Sometimes that's more preferable. If for some reason it's backward dated, VIXM midterm futures is less sensitive to spot VIX, but it's, like again, depending on the shape of the futures curve, it might be a better option. I like to alternate in and out depending. There's also UVXY if you really want to take advantage of the decay.
Yeah, I'll do that as well. Generally, I'll kind of look and see where, because I'm an options guy. I'll look and see where the most liquid options are, and that's the one I'll do.
Yep.
UVXY's got pretty good. Some of the ETFs will use UVXY calls to hedge. So you do see institutional flows in and out of that. I actually haven't seen that first one you sent, the ETN. I tend to avoid those, but they no tracking error though.
It's doable. I'm a proponent of the old saying, it's not what you trade, it's how you trade it. So I get along with a lot of different ETF stuff, and a lot of what I do is just sell options on them for income, but including the leverage stuff. But when it comes to some of the stuff that like UVXY here, when it's just like buy a put whack-a-mole. Every time it pops up, you can almost guarantee it's at least going to give half back, and it's a real easy trade.
It's a good shortfall strategy because at least when you buy a put on UVXY, your downside is limited, and you can more precisely size your position than just going short volatility with a short futures ETF.
Right.
A lot of them don't behave as you predict.
So you don't get your head
UVXY,
handed
it's good.
to you.
Right.
What's that?
Oh no, you go ahead.
Go ahead, Matt. What'd you say?
I said you don't get your head handed to you if you're short something and it goes up, 200%.
Right.
Yeah, if you use a put, you're fine, but I would never like short UVXY, even if I had the collateral.
No, never.
Yeah, that's
Right.
suicide. Don't do that. Highly not recommended.
I think somebody one day might make like a left tail strategy where they just like upfront tell you this thing's gonna blow up Sunday, but until it does, you're gonna pocket fat premium / capital gains.
Right.
I could totally see that as an ETF. Just as long as you say, I think XIV had that. They were like, yeah, this thing could go to zero one day, so yeah, just understand that we might liquidate this when it gets bad, and they did. But before that, everybody made bank, so it's just the nature of things.
Yeah, there was even a natural gas ETF that did something like that, and it was like, yeah, everybody made money until it stopped trading.
Which one was that? Was that an ETN or an ETF?
I think it was UGAZ. I might be wrong. It was a long time ago.
UGAZ. yeah. That was a classic. It's been a couple of these.
Same principle, designed to go to zero. It was never going to be a winner for an investment, but it was great to trade.
So Tony, where are you at on like the covered call ETFs as a whole?
Colleagues?
Covered calls, yeah.
Cover calls. Seldom tactically and on individual holdings, and never just systematically on an index. Like I could go on and on about the SIBO buy right indices. Like, why would I let someone front run me by mechanically selling the same 2% out of the money strike every month precisely on this date on 100% of my position? You are giving away so much upside. Like, I think my favorite cover call strategy right now, if I was to do something, is I'm going to go long 100 shares of IBIT. That's about $61 right now. So 6,100 overlay. I will sell the December 17th, 2027 strike at 120. That's an 893-day expiry. And I pocket a $9.60 premium per share, right? That's a ton of upside. You are assuming that by 893 days, Bitcoin will hit over 190K. for you to be in the money. Annualized, your cumulative upside is around 70%, not counting the premium. Annualized, it's around maybe like 30 or something. I don't know the math off the top of my head, but like there are smart ways you can sell covered calls without just being what I call an income monkey. Like, yeah, it's nice to sell at the money with like a weekly strike and just collect as much premium, but it all depends on the asset. I do that on IWM or something volatile like IBIT. I wouldn't do it on like the Qs. You just get your face ripped off.
I do it on
Right.
TNA, so it's even more
Oh,
fun.
that's that treasury one. That has options. I didn't know that.
What do you think, Matt?
Well,
Oh,
yeah,
yes.
TNA is small cap, not
Yeah, small
treasury.
cap. I was gonna say, yeah,
Oh, yeah.
I saw call and puts on that in a wheel trade, and yeah, it's been gangbusters for me even when it was down.
Well,
Yeah, some
but
people use TQ for that. Yeah, it's a smaller price per share than IWM, and I guess the volatility is better, right?
Yeah, that's the whole thing.
The covered calls have been one of, if not the most popular category, and people are, they're enticed by the yields, but they don't look at the total return.
Right.
So
Yeah, they never
a lot
do.
of times, you look at these things, oh, great, there's a 70% yield, but my share price is going down. My total return's like 5. And if I own the underlying, I'd be up like 50. But, the way the SEC lets you do the yield, and like you said, I mean, we hear from market makers all the time, a lot of these guys they see coming a mile away because they're doing the same thing every single month. And, the market makers are making a fortune, writing or, giving or buying, I guess, in this case, these options from these guys who, it's obvious what they're doing. And, and they're not like a retail buyer who could decide, hey, I'm going to do this or I'm not. It's like, hey, we got to get into this call right now.
Yeah.
There's nothing we can do. And you have like, the Susquehannas of the world who are making a small fortune.
Right.
Where, and the individual investor just sees the eye-popping yield number.
Mm-hmm.
Right.
Yeah, we see that like QYLD, one of the biggest ones, got 8.42 billion every month, man. They're selling that at the money call on the NDX. And you're right, it's just so easy to front run. I could probably do it myself. And on your point about underperforming total return, yeah, and I see that especially with the synthetic single stock covered call ETFs like MSTY, right? From 2024 February to today, it's returned in annualized 182% with distributions reinvested. Seems pretty good until you compare it to actual MicroStrategy stock uncovered, which would have done 257%. So what use is it getting your own money back because most of the distributions return a capital to underperform the underlying and fork over a 99 basis point fee, right? It just, and they don't even own the stock. It's a synthetic covered call. So they buy the long call and sell the short put at the same price, and then they sell a higher strike short call. So they don't actually own the underlying. And the most absurd thing is you can now trade options on MSTY. So you have options on an ETF that holds a basket of options on a stock that is itself leveraged to the price of Bitcoin using convertible debt. I call these derivative onions. And, again,
that's a good
buyer
word.
beware. Yeah, derivative onions. It's like 3 layers of derivatives. And, people love this thing. I saw a post on Reddit. I have the comment in one of my LinkedIn comments. I took a screenshot and it was like, I just took out a personal loan at 8.99% to buy more MSTY. And I was just thinking, you poor suckers. Like, you are going to get margin called in so many different ways that I didn't even know was possible. But this is like the entire like subreddit for the provider of these ETFs, YieldMax. I don't know if it's an astroturfing operation or if they really are just that fanatic about these products. If you go on the LinkedIn page for YieldMax, there are people who list themselves working at YieldMax, but as investors. So they'd be like, yeah, my workplace is YieldMax. I'm an investor in
I've
MSCI.
seen that, yeah.
Yeah, go pull it up. It's actually
my career Robinhood trader.
I probably can't comment on YieldMax. I'll get myself in trouble.
So
I can't mention one that you wrote. So yeah.
All right. So Tony, any other overhyped or misunderstood ETFs right now? Obviously that group's one. Anything else? Any other any other red balloons or whatever you call it? I don't know. What's the word?
Red flags?
Red flags, I guess.
Or red flags? No, I have a ETF blow up bingo card.
Yeah.
Just for compliance purposes and also just not to torch every connection I have in the industry. I'm not going to show it, but there's quite a few short volatility ETFs and single stock ETFs on there. I did manage to tick off some of the Russian ones when all this stuff kicked off with Ukraine. I think ERUS just completely got shut down.
Right.
But the ETF industry is very much in a boom cycle right now. I on the ETF Central Screener, every week I refresh that. There's like a dozen new funds popping up, and a lot of them are active. We're seeing a lot of what do they call 351 conversions too?
What's
a
that?
lot of that's
Yeah.
a lot of that stuff. And as excited I am about learning more about tokenization, is just the ETF industry really is firing on all fronts. And when we win the SEC, it's not a matter of if, when the ETF share class approval goes through, it's going to open a floodgate. Every active mutual fund out there in your 401k is going to get an ETF. Personally, I'm very excited to have ContraFund have one. If Fidelity's listening on this, please give me ContraFund as an ETF. I don't care if William Danoff is like retiring in a year. I still want it. But
Right.
it's very much a good time to be in the ETF industry, I think.
Yeah,
I would agree with that with that statement. Yeah, mutual funds are dinosaurs. All the historical mutual fund companies have gotten themselves into ETFs. That is, the future. What I would hope a contra fund doesn't do is decide to do a non-transparent, because they think that there's
Blue Chip Growth did that, and Magellan did too. And
did they really? All right.
Wow.
Yeah, they did. The ETF version of the non-transparent or semi-transparent version of Blue Chip Growth is actually done okay. It's got about 3.8 billion AUM, and every time I look at it, it trades with a pretty okay spread. Magellan's been a disaster. I think it's cracked like 200 mil, and that's it. But it speaks volumes that they didn't do ContraFund as this. Somebody at Fidelity high up took a look at their three most famous mutual funds and was like, okay, we're only going to make these two active, semi-transparent, and ContraFund, no.
Yeah, I think
just
that sucks.
I
just
don't
the
really
lack
get
of
the
faith in the
conversation here. So you're saying that Fidelity converted some mutual funds to ETFs and they kind of suck?
No, they launched a standalone ETF version, but using the semi-transparent structure.
What does semi-transparent mean? That's the part I didn't get.
So they don't disclose their portfolios on a daily basis. They disclose what's called a tracking basket, which has significant overlap with said basket. And that's used by the APs to facilitate creation and redemption. But this is done to keep the actual portfolio hidden. So like mutual funds, they may only disclose that monthly or quarterly.
Oh, I see.
The problem is, like, for investors, like, the whole point of ETFs is transparency. And I understand you got to protect your secret sauce, but I looked at the active share for Blue Chip Growth. It's 38%. What are you protecting?
Right.
You're barely differentiated from the benchmark. 38% active share. I don't see the need to keep that non-transparent. You're
Right.
just indexing mega caps with a few differences in weight. Like, that's not secret.
I
Right.
see.
And if you look at like the best example to me of why it doesn't matter is Cathie Wood, because ETFs are required to have your holdings public, but it's the next day. I think our website's usually updated by like 9:30. But Cathie Wood went the extra step of every day she told you her trades. And she's still got billions in assets. She didn't have a big portfolio. I could have just said, you know what, I'm not paying you a management fee. I'm going to replicate your portfolio and I'm going to replicate your trades. And she got billions, So to me, it's like, just shut up. One of the great benefits of an ETF is I know what I own. And
it goes against the entire principle if you keep it opaque.
Exactly. Because, then, how am I going to know? Hey, I put this fund in. How much overlap do I have? How much Mag 7, how much NVIDIA, all this stuff, I just don't know. I can do correlation analysis, but it's not the same. I want to eyeball it and see, what do I own here?
Yep, I always split down their top 10 holdings and kind of do my own analysis on anything I trade with an ETF in front of it. So
I respect Cathie for doing that. Like, I don't agree with her style. Not very much a growth investor, but like, She had two
But
things.
neither is she.
She had high active share. And, that's more than I could say for most active managers. At least what she had in ARC was sufficiently differentiated from most benchmarks I've ever seen. It was different than the Russells, different than the NASDAQ. She tried something different, and like zero interest rates did help her, and she crashed in 2022. But like, if I'm gonna pay 75 bips for something, like you better be doing something different than the SPY.
Yep.
Oh, yeah.
Right. That makes sense. Right.
100%.
So we this podcast is now called the H.E.A.T podcast. The T stands for themes, right? So Matt and Tony, like what themes are you guys most bullish on for the next 12 to 24 months?
Good
You
question.
go first, Matt. I want to hear this.
Matt, you go first.
Right?
Yeah, I mean it's all the stuff we talk about, all of the AI areas, whether it be, the chips like NVIDIA, the data centers, the energy, AI in healthcare. Then you look at things like drones, in all new warfare stuff, space-based stuff. And really, I mean, my favorite right now, and probably for the next 3.5 years, we
Trump.
call it Trump's inner circle.
Right.
Anything related to Trump. So I got out of all my Tesla, when they started fighting. And obviously Tesla's getting killed. Trump mentioned coal. So I got into BTU.
Love BTU.
Yeah, that's my favorite coal. I mean, Trump's a coal fan. So, I got into BTU sometime, under here. And, and that's going up a lot. When Trump talked about nuclear, Jeremy and I were both getting into nuclear like crazy. You look at things like CLBR, which is the SPAC that Don Jr.'s involved in. You look at any of the Cantor kind of SPACs and what they've done. So really Trump's inner circle. And I don't know if you saw this, Tony. We just filed
the
last
Grift ETF?
Yeah.
I saw that.
Grift ETF. So we're going to be tracking Congress people's trades also.
I can't wait for that one.
Yeah, I mean, the problem with the congressional trades is you've got a 45-day delay. So I still think there's alpha there, and I want to include that. But what you don't get a 45-day delay for is anyone who's got any relation to, the president. That stuff you're finding out in real time.
Usually on Twitter or Truth Social, yeah.
Yep.
Well, yeah, I mean, Trump's going to tweet something, someone's going to tweet something. Or, someone in retail is going to be on top of that and find it.
This guy. I'm always on those. And it's funny. I mean, you could literally just monitor Twitter and figure out anything that, Elon's saying or anything Trump says, or hell, there's a few other people I kind of follow in there who are retail based, but they do a lot of looking into all the different stuff that's related. All the stuff that hangs around Trump. And yeah, you're right. It's essentially just wait for the word, go look at it. Chart looks good, trade it.
What I like to do there though is, so there are 4 discords that I'm in. Because the problem with Twitter is there's so much fake news, and then now the bots are just, I mean, they're just awful to sort through. So I prefer discords. I still, I'll watch Twitter, and there are certain accounts on Twitter, all right, these guys are good with news items. And then obviously, I mean, Trump, Trump's going to tweet, and who that one is.
Yep.
But yeah, I mean, there's just so much there that, that's really my favorite. And if I can play it in a SPAC, I mean, not CEP, I'm not in that, but CLBR, it's a SPAC. It's ramped up, but my downside is somewhere around 1050.
Yeah.
Wow. What was that? Anything to add there, Tony? Sectors, themes, future, et cetera, et cetera.
2, one more long term. I'm pretty bullish on the US midstream right now. And it's like Matthew said, coal, but I want that energy sensitivity backed by long-term cash flows, and I want that ability to pass through inflation with contractually obligated rate hikes. Um, of course, MLPs are always tricky because if you buy single ones, you get wrecked by the K1. If it arrives late, your tax filing's all thrown off. So again, I would use an ETF or an ETN. I think the one I like is AMZA. It's actually leveraged, but not like 2 times. I think it's like at most like 1.25. And who's it offered by? Infracap
Yeah,
and
we
Virtus.
know these guys very very well.
Yeah, AMZ is a good one. And the other trade I was looking at is a long short pairs trade on EUAD and ITA. So you would short European defense and go
Oh, no.
long US ones. And the philosophy is there is that Uncle Sam's big swinging dick of a military industrial complex is going to win long term over whatever bloated budget Europe runs through. I think they
Right.
I was looking at this early. Europe is like they're trying to scrape up the funding. People they can apply for something called safe or secure or something for Europe, and all these countries can apply. And I'm just like, what deficit is this being funded by? It whatever the European defense trade is, it's already. I'm of the opinion it's already done. I think this is way overbought. And the valuations have run up to levels that are not justified by what these companies are going to organically deliver in terms of earning growth, buybacks, and dividends. It's just not going to be on par as the US. And you're going to be fighting a strong US dollar when that resurges. You know, what we've seen recently with the US dollar, I wouldn't bet against it. If you go long European defense right now, you are banking that valuations, multiple expansion will go higher, the US dollar will continue to slide, and that Europe will actually be able to deliver on these defense commitments. If you think these countries can seriously more than double their defense spending from 2% of GDP to 5% has been promised within the next year, like I think that's kind of delusional. So I would short EUAD and go long something like ITA or PPA if you don't like how heavy ITA is.
Yeah, and yeah, I mean, I don't mind people shorting EUAD. That creates volume for us. So
There are puts and calls on EUAD, Matt.
Oh,
there are options on EUAD now. Yes.
Got it.
there we go.
Okay. Okay. Got it. All right.
Yeah.
So
There's a time and place for everything. And the time to buy UAD was, when everybody was flocking to buy Europe. And look how long that
When
trade
I
lasted.
was pounding the table for it, was the time to buy, and nobody cared.
Yep.
And now, now it's when my phone's ringing about EUAD. Like I'll have someone call me, hey Matt, I'm an advisor from whatever. I want to talk to you about one of your funds. EUAD, yeah. Like, okay.
I think when you first started talking about it, I had like a $34 target, and then a secondary target was like $37.80, and the third target was like $41. Nailed all of them. And yeah, I agree. It is a bit chased. It's got to pull back a little bit,
right.
at the very least.
All right. Matt, do you guys ever talk about ETF liquidity? Is that important, Matt or Tony? Are those important things?
I get the question a lot, like usually from retail who are like, Tony, I want to buy these ETF, but the volume's so low. And I have to like painstakingly explain every single time. The volume is a secondary consideration. What matters more is the liquidity of the underlying. If the underlying is a bunch of futures or large cap US equities, you got nothing to worry about. AP and market maker is going to step in and make sure you get a market price close to NAV. If the underlying is something like Argentinian equities, I don't care how big the ETF is or how much is traded, your spread's going to be pretty wide, like 15 or 20 bips, as we've seen with what's it, ARGT from Global X. If you look on the website, 30-day bid-ask spread is like 21 bips.
Yeah,
pretty high.
So what he's saying.
All right, so hold on. A couple of key points here. So I agree with what Tony said. The only time it matters is if you're an active trader in something that's not trading a lot and has a wide bid-ask spread, because I fully believe that if something's got a wide bid-ask spread, it doesn't trade a lot. You should use limit orders. Don't do market orders. Don't trade the first 15 minutes of the day. Let all the underlying stuff open. And kind of settle in, let the spread tighten, and then trade. But yeah, if you're like a day trader or you're in and out like in one day, then it's going to matter. If you're a long-term investor, it doesn't. It's all about the underlying basket. Now, so if the underlying basket is, Nigerian uranium companies, yeah, I mean that's going to be a problematic ETF because those are illiquid. But for the most part, if there's an ETF out there, chances are the underlying is liquid because the ETF structure is not kind to illiquid ideas, because you can close a mutual fund to new money. I can't close an ETF to new money.
Good point.
All right,
Wasn't there
I
one with
see.
catastrophe bonds that's like trading at a pretty wide spread? Wasn't that one?
I mean, that's because those guys had trouble finding a market maker. I know those guys. I hooked them up with their administrator. But yeah, no, I know those guys very well.
I think back
I
in
like
the end of May, I was talking to some of my friends about the Argentina theme was losing a little gas, and it was a pretty good call, I guess.
It's Argentina, Jeremy, not Argentina, by the way.
Yeah,
Just so you know.
did I say it wrong? I said Argentina, I thought.
Yeah, you did.
Argentinian? I don't know.
Yeah, it's definitely not Argentinian.
All right,
Argentina.
Although, like, people were sounding the beat on Turkey a while back, but how much of that was actually just due to their currency depreciating against the US dollar, right? It's when these things aren't currency hedged, you got to look really close to try and separate the the movement of the currency against the actual underlying. Because this was when the Turkish lira was falling a lot, when their inflation was going up, and it trades over now. But this was I think during 21 and 22, Turkish equities were like, I think, up 90% for the year. And a lot of that, the media was reporting it as like, oh, the market's doing well, but no, their economy was in the toilet. It was just the Turkish lira falling so much against the US dollar that unhedged ETFs like this, when the returns are translated back into US dollars, are doing quite well.
So what are you saying? Don't buy this?
I don't touch emerging markets.
Right.
There's so much money to be made in the US. Yeah, you could. These things exist for a reason, and a lot of them are very long-lived, popular, and iShares has done a good job providing exposure to pretty much every country you could want, aside from, like, the uninvestable ones like North Korea. But when it comes to sheer volume, size, and of course animal spirits, nothing comes close to the US markets. It's structurally designed over a century to basically just make the line go up. And
Yeah.
long term, I wouldn't bet against that. American style capitalism is special. There's no other country incentivizes as much shareholder yield as American ones do. There is not the same impetus for buybacks, dividends. In South Korea, half the companies are called chaebols. They're owned by, they look deceptively undervalued until you realize a handful of families owns a bunch of them and they control the outstanding shares. You don't see that in America, aside from, well, maybe Walmart, but even that's been a good investment.
Yeah.
Right.
Here's where, so I agree with everything Tony said. I'd add one thing, is you look at, where are the game-changing companies? And by and large, they are here.
Absolutely.
Where I would go into emerging markets is if there is something, again, game-changing. So I've talked about this before. Last year, my Argentine investments, I believe, were the best performing part of my portfolio. And I went in because, they elected Milei, who was an entirely different, type of Latin American ruler. And he took a chainsaw to their economy and it worked. And, here's a weekly chart of just ARGT. I didn't buy ARGT. I was buying like GGAL and, but I mean, look at this thing. This thing went from, 10 up to, 75 in a very short period of time, but there was a catalyst. So I would only be buying emerging markets if there's a catalyst. There's a lot of people who I respect in retail who are buying, EWZ in Brazil. And, I've stayed away because I think Brazil is going down an entirely different political path. If I'd bought it down here at 22, it'd be at 28. But I mean, I've had an issue buying Brazil, unless, they make a change politically.
Yeah, Brazilian equities are a classic value trap, but the one that I always hear people get bagged on is PBR, Petrobras.
Yeah. Yeah.
Energy always looks structurally cheap. This one exceptionally so. They get enticed by the yield and the special dividends thrown off, but like it's the governance risk there is just not favorable to you. You're not only fighting against like energy and climate proponents, you're also fighting against the Brazilian government who would want nothing more than to completely nationalize it and use it for their benefit to fill their coffers. And maybe if somebody like Milei was in charge of Brazil, this would be a good play, but classic value trap right there.
Yeah.
Right.
I would agree.
Great.
All
Good
right.
call.
So I'm going to switch up here for a second. Where do you see the ETF industry in 5 years, Tony? Any bold predictions?
We're still going to see Vanguard, BlackRock, and State Street at the top. Unfortunately, it's an economy of scale game at this point. The more AUM have, the better. These people have infinite money to throw around for marketing. I think there is going to be a larger and larger niche for boutique providers that are able to carve out a meaningfully differentiated product that none of the big giants are offering. I do see an increasing push into low cost active fixed income because we all know active management works on the fixed income side. It's just the nature of the market is completely different. You're over the counter, it's more opaque. There's no centralized exchange for it. So active fixed income, especially the lower price offerings, 20 bips and below, are going to have an increasing edge. And I think it's actually going to screw a lot of the old fixed income giants like Nuveen and Pimco. I don't think they've kept up on the ETF side. They're still clinging to CEFs, they're still clinging to mutual funds, they're still clinging to the reputation they built up during what was very permissible 3 decades of falling rates, and that's why total return ever became a thing. If you go back and
Right.
plot like PIMCO inflows with interest rates, it's like perfect, like opposite relationship.
Right.
I think they're going to get displaced. Vanguard and BlackRock, they've been pushing very heavy into active fixed income, and I think that the best strategy for smaller players is to push into more exotic areas of that. So, one great example I give: lower tranche collateralized loan obligations, or CLOs. So, single B to triple B CLOs. I want to see more issuances here. Everybody's doing triple A CLOs. I want to see some B or triple B. Heck, I want an equity tranche CLO ETF. There's got to be a demand for it somewhere. I like to see more convertibles. I like to see more preferred strategies. So InfraCap has a REIT preferred strategy, very unique, one of its kind. It's holding real estate investment
What's
trusts.
that symbol?
PFFR. You get a lower beta yield pickup over conventional REITs. I think compared to like USRT, it has like double the yield and 75% of the beta.
Dang.
And
Okay.
it's the cash flows from here are backed by real estate. So like, this is a good diversifier for somebody who runs a real asset heavy portfolio, but doesn't want to be concentrated too much in common equities, or use the conventional alternative, which is, like infrastructure, municipal revenue bonds. Right. And there actually is an ETF for that too. I think from X Trackers, RVNU, revenue bonds. It's a totally new, different approach to infrastructure investing in a
RVN is in Nancy.
NU. Yeah, NU. And it's very tax advantaged, but it doesn't hold the usual general obligations bonds. Again, it's all revenue bonds backed by infrastructure. So these are, I see promise in these because they're trying something new. They're not just giving you the usual ag exposure plus some high yield and calling it a core plus strategy. I've seen too many of those. I can do that myself. I can buy BND and J&K and boom, that's a core plus strategy right there. I don't have to outsource and pay you for it, but I will pay for something like this because I can't get revenue bonds on my own.
Right.
Or I can, but it's a pain in the ass.
I'd add a couple of things. I agree with everything you said. One thing, I think we definitely need. I'm a big fan of preferred shares, good actively managed preferred. But what I'd add too is I think stable coins, tokens will be involved in some way, shape, or form, and I think you will see AI involved. Right now, the SEC is not there on AI. I tried to push through some AI generated ETFs, and it's not a no, but it's 30 pages of comments versus 3 type of deal. But at some point, I would argue we're at that point. AI makes active management and indexing pretty much obsolete, if you know how to use it. And so that's going to flow through to ETFs at some point as well.
I agree. And you know what? The lower cost index providers like Selective Index, like they're gonna have to integrate this. That will be their big competing edge over S&P Global, MSCI. Heck, I already use a ChatGPT to create like, like equally weighted, modified market cap weighted indices. It's just a set of rules and it's a computer. You feed it to it. This is the perfect environment to use that, you know?
Yep.
Agreed.
But then you can even go further and say, you can ask it and, it becomes a dialogue. All right, rate this strategy from 1 to
Yep.
10. And let's say it rates it a 6. Like, okay, what do I have to do to get it to be a 10? Well, you can do this, this, and this. And then, well, okay, that's interesting. What if I do this? Oh, yeah, that's good. Now you're at an 8. All right, but what if I added this in? Yeah, oh, now you're a 9. And, it takes a little time. It takes some knowledge. You go back and forth. But to me, that's how you construct a better index.
I agree. I do something similar with what I do is I feed ChatGPT index rule sets from multiple competing different ETFs. Like I put VIG and VOIM in, and then I will feed them the holdings and be like, okay, well, based on the competing index criteria and the holdings, identify the common ones that pass the screeners of both ETFs. So you can use this as a very like crude way of finding a desirable basket of holdings. So if I combine VIG and VYM and have ChatGPT identify the common holdings and the rule sets that were used to derive that, I now have a basket that is more concentrated, but has both high dividend yield and dividend growth characteristics subject to the quality constraints of both. And
That's
it's
a
just
cool
done
idea.
that work for me. Yeah. And ETFs, the cool thing is all these ETFs are transparent. So they make how they select their stocks well known. And you can just go download that PDF, chuck it into ChatGPT, and it'll parse the most important parts with all the with all the math and stuff stripped out, so you don't have to worry about it.
So this is what an Ivy League education gets you, huh, Tony?
Yeah, pretty much. Well, like I don't know what they teach nowadays, but like it's just yeah. I didn't learn this at Columbia. Columbia I learned more about like how to like keep a bank from blowing up, and it really boiled down to just hold enough cash on the balance sheet, like capital equity ratios, tier 1 capital, all that. It was I decided I didn't want to work as a regulator or in the middle office of some bulge bracket. So here I am trading like a degen.
So I got one more thing to ask. And then first of all, where do we find you, Matt? Want to pull up where's the best spot? Is it on your website or where should someone go?
Depending on what you're looking for. If you're looking for my
action, love and action.
If you're looking for my uncensored thoughts, understanding that I am self-employed and that gives me a lot of leeway, my LinkedIn page is probably the best. You can connect with me. Happy to chat. Just fire off like your drunk high thoughts and I'll entertain them. As for if you want ETF thoughts, if you're Canadian or American viewer, my website is the best. There is no structure to the content. It is my own website. I pay for it. I earn ad revenue off it. Nobody sponsors nothing. I just post what I find interesting there. And you might not agree with some of it, but I try to keep it as factually grounded and with fancy charts and things that people like. And then if you want to follow some more like curated content for me that's been passed through an editorial committee, you can find me on US News and World Report. You can find me on Kiplinger. You can find me on the Motley Fool, which is a lot more like a rudimentary. If you're a beginner investor, probably best to start there. And yeah, there's a couple things.
All right, 1 minute here left. Right. So you wrote this article on LinkedIn here called "Confession: I am a global financial system. Here's how I killed Bitcoin." Want to summarize that in like a minute, if you can?
Yeah, it's just pretty much like Bitcoin, I'm very much a libertarian. Bitcoin was supposed to be this decentralized medium of exchange that couldn't be debased, controlled, or otherwise securitized. And now it's been fully securitized. It functions just like any other risk asset. And this is coming from a guy who's owned shares of iBit and also has a ledger like in a fireproof safe with all his firearms. It's just fundamentally not the same asset anymore. It's not that it isn't a bad investment. I think it's a fantastic investment. If I was to go to prison for 10 years, I would put everything in iBit or something and just forget about it. But you have 9 out of the 11 spot Bitcoin ETFs all using Coinbase as their custodian. This is a company that is audited, that is regulated. That's everything Bitcoin isn't supposed to be. Right. And I think a lot of people who fail to misunderstand this article look at it from the approach that you're trashing Bitcoin. You're saying it's not a good investment. I didn't say any of that. Bitcoin is a fantastic investment. In fact, the 10% Bitcoin, 90% T-bill barbell portfolio has destroyed the S&P 500 since Bitcoin's inception with lower drawdowns and standard deviation. there's numerous ways you can employ this, right? You can buy callers and stuff, but as it stands, fundamentally, it is not the same asset that Satoshi created way back in 2011. It's changed so much, and it started with the creation of structures like market makers. It started with the creation of derivative instruments like structured notes and futures and options on futures. And as soon as spot Bitcoin ETFs debuted, everybody hailed it as the magic bullet, and in many ways it was, but for traditional finance.
Right.
Yeah, I'm not bitter about it. I think it's just the natural evolution of any risk asset. But let's not kid ourselves when people buy Bitcoin and stuff their ledger in a bank vault and say it's be your own bank. I can maybe think of 5 people in my life who are actually equipped to be their own bank, and the other few can't even remember their bank login, much less a seed phrase.
Right.
It's always the war between sophistication and accessibility. And if we want to make this and drive inflows towards what was traditionally a very malaligned and exotic asset class, well, you have to simplify access. My parents, there's no way they're going to be able to go to Coinbase, buy Bitcoin, and transfer to a cold wallet, but they can open up Robinhood and buy IBIT,
Yep.
And for them, otherwise they would not have gotten Bitcoin exposure.
Right.
Very, very good point. I started to peruse that article, but I didn't get time to read it all. I'm gonna read it now.
Yeah, I thought it was good. I thought it was really good, by the way. Good article. All right, Matt. Anything else, sir?
I think we're good. Good talk, guys. We'll have to have you back on, Tony.
Tony, thank you
Definitely.
very much, sir.
We like this guy.
Absolutely, anytime. I'm not really doing much today. I'm gonna go to the shooting range after this and chill in my hammock. But yeah, it's a beautiful day outside, and here I'll show you guys a view from my
Let's see.
cozy little.
Let's see it. Well, all we see is ETF portfolio blueprint right now, though.
What about that? No, right. I have the background. I got to disable my background.
All right, we'll do it next time, bro.
Yeah, we'll do it next time.
All right, see you later.
Enjoy.
All right, see you guys.
See ya. Have a great day.